From 13 ABC, Conklin and Company, with 13 ABC Action News anchor Lee Conklin. First, with what's happening behind the headlines. And Take 3, our panel of political analysts.
Good morning, everybody. Welcome into another edition of Conklin and Company. Today on the program, 2013 and Toledo City politics, the new Congress, and really a fascinating look at Michigan's junior senator, Debbie Stabenow. Skylar Meadows joins us in Take 3 a little bit later. Also, new year, new you, getting you in shape with the help of 13 ABC's Extreme Weight Loss Challenge host and meteorologist Kelly Hybrader and extreme trainer Tom Montgomery. But first, the new year, new tax rules. And most of you will be paying more in 2013. Here to tell us about the changes you're going to encounter when you file your taxes is certified financial planner Ron Gould. Ron, thanks very much for joining us. We appreciate it. Okay, so here we are. Congress gets this deal done. Technically, I guess we did go over the cliff very early on New Year's Day or overnight, December 31st. But then we have the deal. That does increase taxes on the wealthy, over 400,000, who make over $400,000 individually.
450.
$450 for a family,
yes.
Right? But for the most part, middle-class Americans won't see their tax rates go up.
Correct.
Except for this payroll tax that we
tax.
Seem to be burying the lead. We kept hearing that this deal was done, middle-class families not going to pay more, but it's the Social Security payroll tax. Explain what that's all about.
A couple of years ago, Obama tried to stimulate the economy by saying, I'm going to cut your contribution to Social Security down 2%. Went from 6.2 to 4.2.
And that was with Congress's approval,
yes.
Right?
Mm-hmm. And now it's time to go back up to the 6.2. I think Social Security is got enough problems without putting less in. So
you think it was time to pay the public?
Definitely.
All right, so 2%, break that down. Just about everybody out there is going to see a difference in their paycheck. Could it come the first check of the year, 2 weeks in? Or will the payroll agencies, ADP for example, be able to work that change in so quickly?
Everybody is running at a fast pace trying to get their program modified for the changes in the law. Yeah, scrambling. IRS is out there too, trying to figure out where everything falls on the new tax returns. So if you're making $50,000 a year, you can see $1,000 go away. Okay,
then that's not a small piece of change right there.
No.
Right here, let's break it down here. And up to $100,000, you're going to lose $2,000, right?
That's right.
But you say it's time to pay it back. Maybe you shouldn't have gone that way in the first place. Is that a political statement, Ron?
That's a political
statement. I thought you were you were going there. But $2,000. But there is a cap here, right?
Yes.
117,000.
117,000.
Explain what that's all about. The 117,000.
That is indexed, so it goes up a little bit each year, depending on what the rate of inflation is. And that is what they have calculated as the rate that we need to charge for Social Security to meet its obligations. I think that is probably a little bit short because when we had a lot of unemployment a couple of years ago, people who were close to retirement, age 62, they were going into Social Security and taking the money out, and they probably wouldn't have done that until they were 65 or 66. So there's a tremendous drag on Social Security funds.
That stemmed from the lack of consumer confidence at the height of the recession.
Yes.
Okay, so we may be coming out of that. We hope we are indeed coming out, and this fiscal cliff debacle is maybe behind us. But we hear so much about the debt ceiling and cutting spending that we have to get that in check. So looking ahead now, people say, okay, we're going to lose money on this payroll tax, but agencies are scrambling, payroll, the IRS, and people look forward to refunds, and they go at it right away. I'm going to get that TurboTax. I'm going to file right now. I'm going to get my check back as soon as I can. Do you advise them to hold off?
It depends on the complexity of their return. If they're simple returns, just W-2 earnings, a little interest, short form, go ahead and file.
Okay.
TurboTax can handle that. If you start getting into some of the other more complex and higher income people, well, maybe you better wait a while.
What is higher income? What do you say?
We
Call
have
higher income?
We have a new definition from Congress.
$400,000.
$400,000.
Okay. Okay. All right. And there was a compromise. It was $250,000 during the campaign.
Yeah.
There was $1 million talked about.
Yes.
And now we have 400 or 450,000.
Mm-hmm.
So chances are, if you file now and you want that refund, you may have to go back and amend that return later on, or pay Uncle Sam later on.
It depends on what the complexities are.
Okay.
For 2012, they're pretty well set. For 2013, it's still up in the air.
All bets are off there, right?
Yeah.
Okay, Wall Street trying to react to the fiscal cliff seemingly every day leading up to the new year, and now it's been a pretty good start to the new year, would you say?
Yes.
On Wall Street, with the Dow Jones Industrials going up, falling back a little bit late last week. But what would you advise folks to do? Get into the market now, hold off, let's see what happens. As a certified financial planner, what are you advising?
Retain a good financial advisor.
Okay, okay, that makes sense.
If you have
I'm shocked that you brought that up, by the way.
If you have a short-term goal, you don't want risk. If you have a long-term goal, you can accept more risk. But even those who have a long-term goal may not emotionally be able to accept the risk. So you need someone to discuss with you what your risk level is, how much you're willing to accept as a gain and loss in any given year. I was talking with a client today, and we looked at getting a steady rate of return over a long period of time for retirement. So we don't go to the aggressive model. We scale that back by having more bonds, more cash, sector types of things. Right now, most of the clients who are in the conservative side, retirement, 30% is in the market, the rest is in bonds.
Okay, all right. But slow and steady for many folks wins the race,
You're
right?
not going to get the 37% decline you did in 2008.
Good, good.
But you're not going to get some of the 27% gains you had in a year.
Right. Maybe somewhere in that middle range, and for many folks, that's okay. That's okay.
I like it.
All right.
I don't like watching the tape on Wall Street because it goes. And I'm looking at long-term trends.
Sure.
The short-term trader is a guy who needs Wall Street.
All right. We appreciate you coming in. Certified financial planner Ron Gould. Thanks very much.
You're
we
welcome.
hope 2013 is a good year for everybody.
Yes.
Yeah, you bet. We're going to come back in just a minute. New year, new you. We're going to exercise. Our extreme weight loss challenge host, Kelly Heitbreder, joins us right after this.